Good morning. It is true that the RBI has stuck to what has been expected by all of us in terms of the policy measures. They have maintained the repo rate. They have also maintained the accommodation stance. And it has been mentioned that it was overwhelmingly unanimous by all the members, which is in line with the expectation of the market. Second, when he said that all the segments have to support, it clearly indicates continuation of the budget declarations by the Government of India, by the Honorable Finance Minister, and immediately after that RBI policy measures, again now RBI policy measures. These are all in line with creating enough liquidity in the market so that depending upon the demand, the credit growth can happen, though as on today credit growth is muted at 6% as indicated by RBI. Second, the other round is to control the inflation in a range-bound manner. Though the original expectation earlier was 5.0, it is now 5.1, is a marginal increase. Then the other one is providing few more options or other measures to create an impact, that is yield to be protected in terms of the bond prices by way of GSAP, and also providing on-tap LTRO, besides increasing the limit for MSMEs from 25 crores to 50 crores. These are all the measures in the right direction. In the current environment, COVID second dose, it is a good measure.
The RBI Governor today, Mr. Rao, also spoke about how the banking sector, the NBFCs need to build capital buffers and keep adequate provisioning as well. Talk to us about what PNB is doing during these times, as of course the focus now is on how we can protect the financial sector as well from vulnerabilities, because financial sector, if you're able to protect them only, they will be important in terms of pushing growth, supporting various sectors as well.
See, if you look at the last 1 year, 2020-21, even though pandemic in the first wave was very impact creating because of the measures taken by RBI, whether it's a moratorium extension or restructuring 1.0 announced in August, these measures have done good job. And in the year, majority of the banks have increased provision coverage ratio at the macro level, and they have also consolidated the balance sheet during this time, though the credit growth has been muted. However, unanticipatedly or unexpectedly, the COVID second wave has come, which has impacted now from the month of March. Currently, still it is there where the collections are impacted. However, we expect that from this end of this month onwards, the collections also will improve. Now, in the last 1 year, there has been an improvement in terms of provision coverage ratio at the macro level. And the recent restructuring announced by RBI also envisages provision of 10% in the restructured sector. So these kind of regulatory guidelines will ensure that banks adequately undertake the provisioning and protect the balance sheet in terms of these kind of situations and take it forward without getting impacted because of the NPS, which may increase in the lower segment of the accounts, whether it is a retail or MSME.
Right. Mr. Rao, let me, before I let you go, let me ask you on the kind of demand side pressures. The top leaders of India Inc. are now talking about a demand related push that perhaps Finance Ministry needs to look at. What has been your experience as we're seeing now the cases coming down and the second wave of COVID-19 ebbing, the risk really continues to be the fear psychosis that of course plays on the minds of people, and an impending third wave as well. So what is the need of the hour in terms of a demand related push that perhaps the government needs to look at?
We have seen from October 2020 onwards, demand coming up from the rural and semi-urban segments at that point of time, and particularly in the retail sector like vehicle and housing loans. Now, after the COVID second wave came, the demand at the rural and semi-urban also has been impacted. And even from July 2020 onwards, we have seen demand for vehicle, auto industry doing well, and again got impacted from March, April 2021. So if you overall look at, the demand has been centering around only in the consumable sectors, retail, MSME, and automobile sectors, rather than looking at any high industry investment coming up.
Okay, well, on that note.